In the last week or so, Bitcoin is down almost 30%, and all of this is a result of something called a carry trade. This was brought to my attention by Michael Gayed, who's on Twitter. He talks a lot about what the carry trade is. And you see here, I will be proven right about Japan. I'll be proven right about the reverse carry trade. I'll be proven right about that being the spark to a global margin call. I'll be proven right about a credit event. I'll be proven right despite it all. Michael's content brought to my attention how this carry trade can bring the entire world's economy down just because of a very tiny interest rate increase. And in this video, I want to explain to you how that'll happen. First of all, let's go into what a carry trade is. A carry trade is a trading strategy that involves borrowing at a low interest rate and investing in an asset that provides a higher rate of return. A carry trade is typically based on borrowing in a low interest rate currency and converting the borrowed amount into another currency. Generally, the proceeds will be deposited in a second currency if it offers a higher interest rate. The proceeds can also be deployed into assets like stocks, commodities, bonds, or real estate that are denominated in the second currency. Okay, that's perfectly fine. So let's see where this is happening, how this is happening, who's actually making this happen. The main factor that's leading to this is the Bank of Japan increasing its interest rate by about 0.25%. The rate went from 0 to 0.1% to 0.25%. But what a lot of people were doing is they were borrowing Japanese yen for free. They were getting this money. They were using it to buy, let's say, the Nikkei, which is the Japanese stock market. They were using it to buy American real estate. They were converting all of this money into US dollars. Because borrowing yen was free, people were borrowing as much as they could. They were over leveraged. They were trying to maximize their returns on every other asset. So for example, what a lot of people did was maybe they bought the S&P 500 or they bought Bitcoin. And while it was going up, of course, their trade looked great. It was a genius move on their part. But as soon as this happened, the Bank of Japan increased the interest rate from 0 to 0.25. A lot of the people who were previously able to not have to pay interest are now having to pay interest. They're noticing the impact this is having on their trade. So now they went from being profitable with no interest payments to having interest payments and potentially having more and more interest payments in the future. Just in the last day, the Nikkei 225, which is essentially the Japanese stock market, went down 12.4%. So what's happening is people are unwinding their borrowed positions. They're unwinding their leveraged positions. So what they're doing is they're selling this asset, whatever asset is. This is just one out of many that they could have traded with. They're selling this and they're buying back Japanese yen. So they're getting rid of their assets and they're exchanging them for the Japanese yen. What this does is it increases demand for the yen and it decreases demand for every other asset. That includes stocks, that includes real estate, that includes Bitcoin. The main reason why this is happening is because people are scared. It's fear, it's greed, it's people thinking that if they don't sell their assets right now, then they're going to lose everything. Maybe the Bank of Japan will keep increasing interest rates and they'll no longer be able to afford the interest payments on their debt. This is a chart of the Dow Jones and it shows you what happened during the Roaring 20s and then the Great Depression. The Federal Reserve started increasing rates here and the stock market crashed because the people who had borrowed money to buy the Dow Jones, they had just started speculating, they started essentially gambling. They could no longer handle paying back their interest payments. So they got liquidated. All of their assets were liquidated. They were no longer able to hold these stocks and benefit from the growth. So the stock market started dropping. Back then, the Dow Jones was probably one of the most liquid assets, but today we have a much more liquid asset. This asset is Bitcoin. You can trade Bitcoin at any time. Nobody can stop you from trading it. Nobody can stop you from selling what you have. Nobody can take away what you have and get you to make certain decisions. So what happens with Bitcoin is because it's always open and because sometimes these events happen during the weekend and people get scared, they start panic selling. We can see from this chart that just a week ago, Bitcoin's price was at almost $70,000. And in that time, in a week, Bitcoin's price dropped to almost $49,000. The reason for this is that Bitcoin's market is always open and anyone can trade it at any time. Nobody can stop you from buying or selling Bitcoin. That's why we see massive moves up and then massive moves down. This is where the term hodling comes in. HODL is an acronym for hold on for dear life. We're going to see this crazy volatility. We're going to see the price drop and then go back up and then drop and go back up. We can see here that in the last little while, Bitcoin's prices skyrocketed. It dropped all the way down to 49,000 and it's back up to 53,000. A lot of people sold at this $49,000 level and they're probably going to regret it. The reason why I say this is because Bitcoin is a finite asset, and over time, more and more people are buying and they're never going to sell again. While in the short term, this carry trade is having a massive impact on Bitcoin's price, over the long term, I think people are going to see what exactly Bitcoin is and how it is the best safe haven asset in the world. The price is volatile in the short term, but one Bitcoin will always be equivalent to one Bitcoin. When the supply and demand aren't at an equilibrium, the only thing that can change is Bitcoin's price. We can't add more supply to the market. We can't decrease the demand in the market. All we can do is adjust the price. So when somebody is selling and there are no buyers, they have to decrease the price even more to get buyers to join the market. When somebody's buying and there are no sellers, the price has to go up to bring more sellers to the market. This is how all markets work. In the short term, we're going to see volatility, and this carry trade is definitely one of the reasons for that. But over the long term, I don't think this is going to be the case. I think we're going to see Bitcoin being the most widely accepted asset in the world because literally everyone can access it. If you're panicking right now, it's very likely that you haven't studied this asset to the point where you should, but take the time now, study what it is, and over the long term, I think you'll be very satisfied with your decision. I've said this in the past, I've said this multiple times, Bitcoin's price could drop 30, 40, 50% overnight, but it doesn't matter. It doesn't change the fundamentals. The fact that Bitcoin is decentralized money that has a finite supply trumps anything else that's happening in the market. Even if this carry trade takes a really long time to unwind, that's perfectly fine. Bitcoin has nothing to do with the Japanese yen. It has nothing to do with the US dollar. And over time, we're going to see why all of those other currencies are irrelevant. We can see the exchange rate between the Japanese yen and the US dollar here. And the Japanese yen seems to be gaining a lot of traction because people are buying back the yen to cover their short positions and they're getting rid of their US dollars. But this doesn't just impact US dollars, it impacts every asset in the world. The global value of this carry trade right now is estimated to be about $20 trillion. I think this could take a while to play out, and maybe this is the credit event that completely collapses global markets. Japanese banks were really lenient with lending out the yen, and borrowers were greedy because they could, of course, borrow money from the future for free today, and they could consume with it, they could invest with it, they'll have more money in the future. That was the expectation. But now, with asset prices going down, we're going to see a lot of fear in the next few months, few weeks, but it's possible that markets come right back up to maybe wipe out all of the leverage from people who are thinking that the market's going to go a lot lower. Who knows where this is going to go in the short term? I personally don't know. If you want to, check out this guy's page, Michael A. Gayed. He has great resources on this. He's giving great information on this, so check him out. But even with all of this considered, my main thesis remains. Bitcoin is the best asset in the world. It will continue to be the best asset in the world. It may not be performing like it right now, but over time, we're going to see that it does. Keep in mind that most people don't understand what Bitcoin is, but once the world figures it out, things are going to be very different from what they are today. Right now, of course, there's an abundance of supply, and that's perfectly fine because there are a lot of over-leveraged positions that are being cleared. The people who own these over-leveraged positions are having to sell their Bitcoin in order to cover their debts, all of their margin calls. While this leverage is being cleared, there's going to be an abundance of supply for Bitcoin on the market. Eventually, demand will meet this supply where it is, and the price will start going up again because that's the only way for demand to be fulfilled. Keep in mind that all of the people that are out there that are selling, they're going to run out of Bitcoin. The number of people who don't understand Bitcoin and still own it is going to run out. It's finite. The demand for Bitcoin from people who don't understand it right now is going to go parabolic. I think people are going to study Bitcoin after seeing what's happening to the global financial markets, and they're going to want to have a position just to hedge themselves against a total collapse. Let me know your thoughts below. I could be wrong here. This is just where I think the world is going. But if you want to learn more about Bitcoin, watch the video on your screen.